Well, to continue the banking theme, or rather not to be accurate, not the banking theme, but the lending of money theme, I'm joined by Gary Palmer, who's CEO of Paragon Lending Solutions. Morning to you, Gary. I've just been speaking to Ben Kruger from Standard Bank. We have a banking theme today, as I say, but you're not a banker, but nevertheless you are a lender. So your perspective of the lending and borrowing space in South Africa at the moment?
Yeah, well, firstly, thank you very much for having me. Yes, I mean, I was in my previous life a banker, so I do understand that industry. I then left the banking industry to start my own lending business many years ago. So it is quite interesting to see the different perspectives, from when borrowers approach me. I find that the landscape is definitely, just to echo your previous presenter, the banking landscape has changed dramatically over the last sort of 5 years, pre-2008, 2009. The banks had a huge appetite to lend. And then you saw a bit of a meltdown in 2009. And then, we saw bad debts increasing at the banks, increase of regulations, Basel. So there was really a handbrake on the economy. Property developers couldn't get access to funding, etc. And then you saw the banks' attitude change, especially with Basel III, where they focused on earning non-interest income, that was fees and commissions. And if you look at the statistics, I mean, that part of their business increased, between 15 and 20% a year, the non-interest income. And where the banks were focusing on interest income, that was very flat for the last few years. And then the banks, I think, realized that they would like to focus their energies on higher margin type transactions. So that's when they got into the unsecured lending space. For the last few years, they have seen greater returns in that space. But then the last 6 months of, especially in 2013, you've seen cracks developing in that space as well now, with bad debts also increasing. So it's going to be a very interesting time the next 12 months to see where the banks are going to focus their energies. Yeah,
I think it's interesting, Gary, also that because we've had periods of strong growth for some of these bankers, and because the growth rate drops, people speak as if the company is failing. When African Bank took an impairment, and there was concern about the number of impairments and bad loans and so on, their share price was hit and they had to do some explaining. However, it's still a successful company. It's still making money. Was the reaction overdone there, do you think?
I think the issue that they had is that at one point in time, African Bank and Capitec Bank were, I suppose, the two biggest players in that market. And the minute you had all the banks, the other banks, the commercial banks, the Standard Banks, the FNBs as an example, now playing in that space, competition increased. They started changing their lending criteria. And I think that was the most important thing, is where before, these were shorter term loans to this market. The banks like an African Bank started extending their loans to a period of 5 years at higher interest rates. Now, to me, that's not sustainable. When there's no clear exit, you've got a client borrowing money at very high interest rates over a period of 5 years with no clear exit, trouble will loom, and there will be certain issues. So I think fundamentally there's a massive market for it, but as long as the banks stick to their criteria and really just make sure that the exits in these transactions, fundamentally I think it's good. A lot of these banks are also, and other non-bank lenders are now moving into Africa. They're taking their model and going into Africa. My view is that that's the real growth. I think South Africa might be a little bit overheated in that market, and I am a little bit concerned.
Yeah. Looking at you as a lender as opposed to, what can you do that banks can't? Are you more flexible? Do you have a bit more space? And what is the state of small businesses in particular and consumers in relation to borrowing at the moment?
Yeah, I mean, the space that we operate in has really been created because of the void left by the banks. So we are short-term secured asset-based lenders. Our security is always property. Because a lot of non-bank lenders in the market are not governed by the same regulations as a bank, we are more flexible. And I think the banks realize that most of my deals are actually referred to me by the banks. So it allows us to be more flexible with quicker turnaround times. Many of the transactions are are maybe not for us and maybe are bankable transactions, so I then refer them back to the banks as well. So I think before, the perception has changed. Before, if you weren't borrowing money from a bank, the perception was, it's the last resort. Now that certainly has changed, and my forecast for the next 12 months is you'll see more non-bankers, non-bank lenders emerging, and there's a term being bandied about now called a sort of shadow banking, the types of deals maybe the banks used to do, but I think you'll see a lot more players in this space being a lot more flexible, quicker turnaround times, and have a greater appetite to lend.
Yep.